Chinese startup DeepSeek has roiled global stock markets with the launch of its latest artificial intelligence models. The company says they are on par with or better than industry-leading models in the US at a fraction of the cost, which has led to steep declines for AI chipmaker Nvidia's shares and others. Here's what we know about the company and its product development. Since the release of OpenAI's ChatGPT in late 2022, Chinese tech firms have been scrambling to create their own chatbots powered by artificial intelligence. DeepSeek says two of its models have been showered with praise by Silicon Valley executives and US tech company engineers and are on par with OpenAI and Meta's most advanced models. It also says that one of them is 20 to 50 times cheaper to use than an OpenAI model depending on the task. One technology CEO told CNBC he thinks DeepSeek is using Nvidia chips which are banned from being sold to Chinese companies. DeepSeek did not immediately respond to a request for comment on the allegation. The company is a Hangzhou-based startup whose controlling shareholder is Liang Wenfeng, co-founder of quantitative hedge fund High Flyer, based on Chinese corporate records. It is unclear how much High Flyer has invested in DeepSeek. The two companies have offices in the same building, and High Flyer owns patents related to chip clusters used to train AI models, according to Chinese corporate records. DeepSeek's success has already been noticed in China's top political circles. Last week, on the day DeepSeek released a new product to the public, company founder Liang attended a closed-door symposium hosted by Chinese Premier Li Qiang, according to state news agency Xinhua. Liang's presence at the gathering is potentially a sign that DeepSeek's success could be important to Beijing's policy goal of overcoming Washington's export controls and achieving self-sufficiency in strategic industries like AI.
And in what has taken the world by surprise, a Chinese-built AI chatbot by DeepSeek is threatening to challenge the hegemony of players that have been betting on AI and the chips that AI use. In fact, Nasdaq saw the biggest rout yesterday as markets in the US closed with the Nvidia losing as much as 17% and its founder Jensen Huang now poorer by $20 billion in just a single day. But it's not just the Nvidia story. Other stocks which are popular and invest heavily in the AI space have also taken a beating after DeepSeek announced its plans to go ahead and launch what is touted to be the cheapest yet AI chatbot. In fact, stocks of Microsoft were down 2.14%, Google was down 4.2%, and like I told you, Nvidia down about 17%. More in this detailed report.
The S&P 500 and the Nasdaq ended lower on Monday, as Nvidia and other chip makers sold off after surging popularity of a low-cost Chinese artificial intelligence model raised investor worries about the outlooks for current AI leaders in the United States. Chinese startup DeepSeek rolled out a free assistant it says uses cheaper chips and less data, raising questions about investor expectations that AI will drive demand along a supply chain from chip makers to data centers. Nvidia plunged about 17%, shaving nearly $600 billion off its market valuation, while an index of semiconductor stocks had its biggest single-day percentage decline since March 2020. But the Dow actually rose about 0.2%, while the S&P 500 dropped about 1.5% and the Nasdaq fell 3%. Despite the big moves in the red for some stocks, Zacks Investment Research client portfolio manager Brian Mulberry sees encouraging signs.
Well, in the market today, we're seeing it across kind of the different indices, a very different experience. NASDAQ down sharply, the S&P kind of in the middle, and the Dow turning slightly positive. If I pivot that and talk about just growth and value, growth down sharply, but value is actually up over 1% on the day, in particular, large cap value. What does that mean? Investors are coming back to, I think, a little bit more common sense valuations, but also very strong, very healthy balance sheets.
Other stocks on the move included AT&T, which jumped 6% to a 3.5-year high after its fourth quarter wireless subscriber growth surpassed expectations. And shares of Ralph Lauren slipped 3% after brokerage Raymond James cut its rating to market perform, citing the huge rally in the stock, which surged 60% last year and has gained another 11% so far in 2025.
And as Wall Street was shaken to its core, Tesla chief Elon Musk joined the conversation on his platform X, reacting to claims that DeepSeek, secretly has 50,000 Nvidia H100 chips, but isn't revealing it due to US export controls. Remember, DeepSeek had said that it operates at a fraction of the cost and uses only 10,000 Nvidia chips. Remember, this was a bone of contention between US and China over the last 2 years, where US had curbed the export of AI chips to China, trying to prevent China from building its own AI model, similar to the ChatGPT or Microsoft's Copilot. Obviously, backing a post by Scale AI CEO Alexandr Wang, Musk also threw some humor into the mix, calling the model DeeperSeek in another post. As the tech world reacts to these changes, everyone is watching and waiting to see what happens next in the global AI competition. And following a surge in the popularity of its AI assistant, DeepSeek announced that it would temporarily limit new restrictions due to a cyber attack. Earlier in the day, yesterday, the company also experienced outages on its website after the AI assistant became the top-rated and the most downloaded free app on Apple's App Store in the US.
Chinese startup DeepSeek, whose new low-cost AI model rattled tech stocks Monday, suffered a large-scale cyber attack, causing it to temporarily limit registrations. Earlier in the day, DeepSeek said it was hit by outages on its website after its AI assistant became the top-rated free app in Apple's U.S. App Store and overtook ChatGPT in downloads. DeepSeek claims it uses cheaper chips and less data, challenging the idea that advanced semiconductors, like those made by Nvidia, are needed to run AI applications. That sent major tech stocks tumbling, with shares of Nvidia falling as much as 17.8% at one point Monday morning. Brian Jacobson is chief economist at Annex Wealth Management.
This could really be a change in the script, a change in the narrative around artificial intelligence, where it's no longer about what has been called the picks and shovels. That was like Nvidia, as far as with the chips that they were selling, and maybe even the data center providers. Now it's moved on from the picks and the shovels more to perhaps the refiners and the jewelers in that narrative, where it's more about what's the actual use case of the technology.
DeepSeek's popularity has also upended widely held views about U.S. dominance in the AI space and the effectiveness of Washington's export controls targeting China's advanced chip and AI capabilities. Little is known about the company behind DeepSeek, a small Hangzhou-based startup founded in 2023 when search engine giant Baidu released the first Chinese AI large language model. Since then, dozens of Chinese tech companies, large and small, have released their own AI models, but DeepSeek is the first to be praised by the U.S. tech industry as matching or even surpassing the performance of cutting-edge U.S. models.